Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Don Mosher, business consultant, his website venturebeacon.ca. Welcome to This Week in Money, Don.
Thank you very much. Pleasure to be back.
We've done a number of shows about people being very concerned about the TSX Venture Exchange. Are there any chances that the exchange will be improved? I know there was a town hall meeting about the Venture Exchange Thursday in Vancouver. Who was there and what was said?
There were probably 400 very concerned participants that play in the market. I would say a mix of accountants, lawyers, company executives, some investors, and hidden amongst the group were, I understand, employees of IROC and the commission that were noticeably silent through the entire thing. And, you know, it got off to a roaring start as soon as the president of the TMX group got up and started to address everybody about how we were the best venture marketplace in the world. One of the participants in the crowd yelled out, "Used to be." And that more or less set it off. So when Mr. McCoach got up to try and do his brief presentation on the white paper, he got continually disrupted by people yelling out questions and comments at him. And he was really trying to say, you know, not everybody in the room has read the white paper, so let me run through a quick presentation on it, and you'll all get an opportunity to speak afterwards. But nobody was willing to wait for that. One of the guys in the crowd yelled at him as soon as he started out, "Just forget about holding our hands. Let's get on with it." And McCoach was, "Well, not everybody's read it. Let me run through it. It'll work better." He struggled through it. He got through his presentation eventually, but, you know, it was disrupted constantly, which is, I guess, what you'd expect by a bunch of very upset people.
What was the feeling after his presentation? Was it worth the wait?
Bottom line on this is, he can say whatever he likes up there. You know, he started out by addressing the three promises they have on the front page of the white paper. We will reduce our clients' administrative and compliance costs in a meaningful way without compromising investor confidence. So, you know, what they're looking at is PIFs, for example. Guys that have been on multiple boards and having to renew their PIF every 3 years and having to refile PIFs every time they take on a new position, they're going to turn it into a nexus type of thing where you only have to do it every 10 years. You know, automated online filings, an accelerated transaction process, eliminating the general requirement of sponsorship, things like that they can address. But the bottom line is, unless they get the cooperation of IROC and the commissions, they're irrelevant. It's IROC and the commissions that have put up barriers to the public. Definitions like the accredited investor definition, which only allows 3% of the Canadian public to participate. Yes, the Commission's starting to address a couple of things. They simplified the rights offering because rights offerings did not work. They made no sense at all. You're forcing companies to undergo a full commission review, although they've got mandatory disclosures. Why would you go and have to review before you could put out rights offering? So it took the commissions a full year to implement something that was logical and should have been that way in the first place. And now they've come in with, you know, if you go through a broker, you can take up to $15,000 down in a financing that comes with a prospectus. But again, you're putting all the liability on the brokers. Well, the problem there is IROC has more or less come in with all their terms on suitability, risk tolerance, long-term targets and everything. And does a broker want to take on all that liability? And then on top of that, there were no representatives from the shareholders of the TMX, which represent some of the largest institutions in Canada, saying that, you know what, we will support the company that we own shares in. We will launch institutional coverage. We'll launch analytical coverage. We'll encourage our corporate finance to come help raise money for you juniors. We will encourage our brokers as opposed to forbidding our brokers to sell these products to their clients. without all that support out there, the venture exchange is running a real risk of ceasing to exist, because the brokers that do support the venture exchange, which are the boutique firms, are rapidly being put out of business. There's 7 left in Western Canada now. There used to be close to 40, and they're being put out of business by IROC. It is like an intent to destroy those firms and make sure they don't exist any longer, and they're doing it through compliance costs and increased liability that make it impossible to make money or even survive as a firm.
Do they realize what kind of damage they could do to the Canadian economy if we don't have a venture exchange?
They don't care. What you've got is a bunch of bureaucrats that are completely risk adverse, regulating a risk market. All these guys have 6-figure salaries, very secure jobs, expense accounts, inflation index pensions. All they care about is protecting their job. If they do something that results in any kind of fraud that's covered in the paper, their job's at risk. So what they're doing is shutting it down and therefore feeling that their job's secure. I think they're wrong.
I was going to say, how do you have a secure job if the venture exchange shuts down due to lack of business?
Well, they don't believe they've done that kind of damage. They're too ignorant of what they've actually done. That's the worst part, because they've never been involved in any kind of entrepreneurial situation. They're just bureaucrats that have walked into jobs during good markets. They've continued to pile on regulations. The markets have continued to function, but now that we're into a low commodity cycle, and now that the Canadian economy is under pressure, the regulations that they've imposed on us are starting to come home to roost. And it's gummed up the works. You know, if you compare it to a car salesman, a 17-year-old kid walks into a car lot and buys himself a Ferrari, a Porsche, a Lamborghini. We see lots of them running around Vancouver with N's and L's on the back bumper. That's an investment of $200,000-$300,000. Is there anybody questioning suitability? Is anybody questioning the risk that is going to be imposed on the highways? The potential is to kill somebody. And does anybody ask about, long-term target for the investment? We know it's going to lose money when you drive it off the lot. No liability imposed on the salesman that sells that car to that person. On the other hand, if you want to open an account for $10,000 or $15,000 with a broker, you're going through a 15-page disclosure document and all the liabilities imposed on the broker, regardless of what you do. He should have known it was unsuitable for you. He should have taken risk into account. Brokers are getting nailed now, even though the account is purely speculative. So they don't care. They don't understand it. And by the time the ramifications, which are now starting to occur, hit home, and maybe at some point in time the media picks up on this, it'll be too late. That town hall meeting had no mainstream coverage at all. You're covering it. Stockwatch covered it. You didn't even see it on BNN, let alone CBC, CTV, the Globe and Mail, the Financial Post. Mainstream media is not covering it, and as a result of that, the Canadian public is blissfully ignorant as to what's going on.
And you said only 3% of the Canadian population qualifies to invest. How has that made it an exchange that is useful for raising money?
Well, that's the problem. They continue to impose these things, flying the banner of protect the public. In some regard, I would call these guys economic terrorists. You could call them the Canadian version of the IS. Impede speculation. Big black banner with white lettering on it that says protect the public, while they plant EIDs under the foundations of the Canadian economy, which act as an incubator for future job and wealth creation. Every time they put one of these regulations in place, if you visualize it as an explosive device, that's what they're doing.
Well, if they were so concerned about people 65 and older keeping their money in a safe investment, how come they allow them into casinos?
Well, even a better comparison than that, Jim, is Shane Nyquist, I think you interviewed the other day, and he brought it up. He sold a house the other day for $3 million. It entailed 2 signatures. A $3 million investment. Nobody decided suitability of the investment, What's the risk on that $3 million investment? None of that stuff is looked at because it's real estate, just like none of that stuff is looked at because it's car sales. But when it comes to the Canadian capital markets, which are the foundation of this country, all of a sudden we need all this protection for the Canadian public. So secondary to casinos and lotteries and any other way that you want to blow your brains out financially, they've decided that the capital markets, with audited financials, vetted management, and full disclosures, mandatory disclosures, that industry needs to treat every single person in it as a criminal.
You're listening to This Week in Money. I'm Jim Goddard. We're speaking with Vancouver business consultant Don Mosher. If the venture exchange does what it can to improve things, will IROC and security commissions also improve what is needed to be done?
I very much doubt it. I don't think they understand it. They pretend that they're paying attention to it. And the commission, yes, they have passed a couple of things lately, which I applaud them for, both on that prospectus exemption and in regards to the rights offerings. But if they really want to do something, do away with the accredited investor definition. It makes no logical sense at all. And over on the other side, who the hell is IROC to tell me at the age of 60 what I can and cannot do with my money? I've raised a family. I've managed to stay financially sound all these years without some person that does not know me at all deciding what's right for me to do. And it goes for every Canadian citizen out there. The population of Canada is completely ignorant to the fact that their rights are being taken away by a group of people that claim they're protecting them. You have the right to do everything else, but you can't play in the capital markets. It's an unlevel playing field that is very much tilted towards the wealthy in the country and towards the banks selling their proprietary products. Most of the stuff that IROC is imposing right now is because they say it's a conflict of interest for humans to advise humans. IROC and the OSC gave $2.5 million to an organization called Fair Canada. They call themselves a charity organization, representing fair representation for Canadian investors. What they are is a lobby group for the regulators to push for more regulations. And what they're pushing for is robo-advisors because they say there's too large a conflict of interest when there's a human advisor advising a human client. Well, let's take a look at the conflict of interest with the banks selling their own proprietary products and continuing to gather a majority of the wealth in Canada under their arms. They've got people's mortgages, they're selling them insurance, they're selling them proprietary products, they're holding on to their savings account, checking accounts, personal debt, the whole thing. It's incredibly one-sided when it comes to conflict of interest.
Are governments aware of the problems on the venture exchange and aware of the damage the current regulations are doing to the economy?
You know, the only time you can believe a politician or a majority of politicians is when their lips aren't moving. You know if they're moving, they're lying. They get funded by the big corporations in Canada, and the biggest corporations in Canada are the banks. So they're pretty much the beck and call on the banks. Anytime they're looking at advice when it comes to the economy or anything else, they rely on the banks. So the banks are driving this whole thing forward. And in the meantime, Canadians are losing all their freedoms.
How important is the venture exchange to the Canadian economy, and what has it done in the past?
Well, we really don't know what it's done in the past unless you go all the way back to the Depression when we had some major failures. I guess the most recent thing would be the real estate collapse in 2008, where you saw $7 trillion lost in the U.S., because the banks were packaging up a mix of mortgages and selling them off as guaranteed investments. Up here, we managed to skate through it because, you know, you needed to put down 10% on a mortgage, and our real estate market wasn't involved in that kind of leverage. Next time around, I don't know about it, because if you look at the real estate prices in Vancouver right now, like 30-year-old kids that are having their first children are buying $1 million, $2 million houses. And if the money quits coming in from China, I think it could be a dramatic collapse in real estate prices both here and in Toronto. They're feeling the pain of it in Calgary right now. But our unemployment statistics aren't even accurate because all they're running it with are people that are employed by companies. How about all those people out there that are self-employed, contractors that aren't getting work in the commodities industry these days? I don't think, if you're not collecting unemployment, you're not in that database. I think it's much, much worse than we know it is.
How long can the venture exchange last if dramatic improvements are not made?
Well, we're going to come into another audit season here shortly, the end of April. And I think that's going to be pretty telling. That was one of the discussions that kept popping up at the TSXV meeting, was the zombies on the board and why they haven't been thrown off the board yet. And Mr. McCoach was saying that, well, we do follow our own rules and, we have dealt with this issue. But I think this time around, it's going to be very telling. But the other thing about it is it also tells you how resilient these junior companies are, because this has been a serious issue for over 5 years now. It's gotten worse and worse and worse, and maybe we finally got to the bottom on it. But there's a lot of companies out there that aren't worth the paper they print, and here's the TSX has not suspended their CPC program, so they continue to print crappy paper with no value, with the idea that businesses are going to use the CPCs, and if they cared about the investor in any way, shape, or form, they would be pushing people into using these vehicles, revitalizing them, refinancing them, allowing a simple change of business, suspending the CPC and IPO program, and limiting the number of companies coming onto the board. And when they want to diversify that board away from its majority resource sector right now into more biotechs and high techs and just real businesses, they should be forcing RTOs on everybody. That's what they should be doing.
Don, would it be accurate to headline this interview as the engine room of the Canadian economy is close to collapse?
Yeah, that'd be a pretty good one. The incubator and engine. It really is an incubator. What we're dealing with here are infant companies, and just like human infants, they're much more fragile to their environment. You're not going to take a baby out of the womb and throw it out into 40 below weather and expect it to take care of itself. You're not going to expect it to feed itself. You're not going to expect it to use bathroom facilities. You understand it's an infant, and you nurture it, and you allow it to grow. And that's the way the venture market needs to be treated. It needs to be nurtured. Quite the opposite from that. It's being treated no differently than the banks that are overseeing this complex in the first place. And in the meantime, the big institutions have literally banned their investment advisors from participating in these junior markets. So nobody's nurturing it anymore. They're trying to kill it.
Is Canadian investment money going elsewhere, overseas?
Absolutely. I had a British guy in my office yesterday who is a full-service broker in London. And one of his side businesses is taking venture companies around Europe, introducing them to funds and high-net-worth investors to raise money. He said to me, the venture exchange is not even viewed as a real exchange in Europe anymore. You're better off to go to AIM. He said he listed a silver company on AIM last month, raised them £1 million. They've got volume and they've got support over there. So here's a guy for the last 25 years that has been as involved in the Canadian venture market as I am, and he's just written it off. Don,
is there a website people can go to find out more about this and perhaps get involved with the issue?
Well, people can contact me and I can put them in touch with people that are involved in this. I've got a website which is venturebeacon.ca. I post articles and blog comments on it, and I'm more than my phone number and everything's on there if you go to the contact tab. And I'm more than happy to talk to anybody about it. It really is a problem that a majority of Canadians are ignorant, and if it doesn't impact them directly, they don't understand and don't care about it.
Don, thanks a lot for chatting with This Week in Money.
My pleasure. Have a good day.
My guest has been Don Mosher, business consultant, his website, venturebeacon.ca. That wraps up our show for this week. Comments or questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.